Everyone, Paul here. Well, today the stock market is open, and I kind of want to go over kind of a strategy towards what I'm doing. You guys can follow along. Uh, but while I was sick, I was I was researching a lot of things about what I looked up what a lot of the rich people, the people that are billions, zillionaires now, what they did in the beginning. And I put myself in that mindset, and specifically, I looked at Warren Buffett and some of the others, and one of what the guy's name is on Sharks, but he invested in stocks as well. And a lot of these millionaires have got rich just for investing in stocks and compounding their money. So you got to put yourself in the mindset first of what all these rich people did in the beginning, and of course what Warren Buffett did. He had time on his side because he was 15 when he first, or around there, and he first got a little bit of money and he put it into the stock market. And ever since then, he's been compounding and compounding, and I think he's still compounding, but he's a bazillionaire now. But anyway, do what the rich people are doing, and this mindset is a hard transition to go for somebody that has been in like crypto for you kind of it's a hard decision to make if you want to transition into this, because you basically have to transition your mind to focus more on stocks than anything else and make that your top priority. And I'm going to explain why stocks and investing in stocks, particularly the ETFs, will give you the best results long term. And you got to ask yourself this question: what are the millionaires doing? What did they do to create their wealth? And then you just got to mirror what they did, and you should have pretty close to similar results. But what I learned from is I had to take a very hard lesson and really said, well, if that's what they did, maybe that's what I should focus on. And so I'm going to give you guys a strategy, and this strategy, you have to put yourself in the minds of what you're going to do first for your income. If you want to grow your money, invest in stocks and ETFs first. It's very hard to transition from crypto to just doing this. Now, not to say crypto's bad, but you want to compound your money. And with Bitcoin and crypto, it's so volatile that you can't really compound with crypto the same way that you could do with stocks. So what I want to kind of go over today is a strategy that you can do to where you can benefit kind of both. So what you want to do first is you want to go Robinhood, or I forget all the other all the other apps that are out there, but go to Robinhood and start buying. I recommend an ETF. Do the S&P 500. That's what my focus is, because the S&P 500 is linked to. Let's see if it listed here. It's linked to the top companies out there. I mentioned this yesterday: Apple, Amazon, Google, Warren Buffett's company, Health, Microsoft, Tesla, all those good companies there. So you own a piece of each of these companies, and over time, the market, is, from what you can tell, is right now. Right now, I don't think the stock market's open yet, but once it did, you'll see your return daily on here. So what you want to do is you have to, if you're like me and you're kind of late in the game with compounding, research compounding and see how it'll benefit you guys. But basically, if you're you're older, you're not in your 20s or your 30s. If you're in your 40s like me, you missed a lot of time when it comes to the compounding part of things. So what you have to do is you have to consistently be pumping. You have to pump more money into this than you were if you were in your 20s or 30s. So since I missed out on a lot of those, you have to put more money into this, and you have to do it for a little bit longer to get the snowball rolling. So basically, once you do that, you'll start to see returns. And your returns are not always going to be positive. You're going to have down days just like Bitcoin, but it's not going to be as big. You might have 1-2% down. You're not going to have like 20% or how Bitcoin drops and how volatile it is. You're not going to have bad drops. It'll go back up. It'll slowly go back. If we look at the chart here, if we look overall, let's go to the day. If we look at the day of the stock market, personally what I'm into is the S&P 500. And we look at it, and we just go back. This is today. It's $390 today, June 29th, 2022. Let's go back and see what the price was. June 20, let's see. Just go back to a day here. June 29th. Let's just keep going back here a little bit more. Okay, let's go to this random date here. Let's go right here. Okay, so this was August 29th, 2017. So this is what, 10 years later? The price is $243. So you can tell from that point of where it was and where we're going, you can see that it is has been a constant. It is volatile at some points, but it has been a constant uptrend up. So for me, this is the safer bet than crypto. So you can see it's constantly going up. It goes up over time, and it's going to continue to go up. So knowing that it's probably going to keep going up over time, and the increments are not going to be as volatile as Bitcoin, it means that your overall wealth is going to grow over time. So you're going to see it compound over time. So what I'm going to kind of do is go over a strategy on how you can compound, how to compound even more using this. Now what I do is I wait probably by Friday. I let this accumulate. I let my return accumulate till Friday. And then on Friday, I probably would sell whatever my return is here. And your goal is you want to make sure your return grows. And, since the stock market is closed on the weekends, that gives me 2 days to kind of mess around with the money I had just made from the week. Since, I hate it when the stock market's closed because I'm like, I'm not making any money. The stock market's not open. It's not fun. I'm not making money. So I withdraw on Friday, and on the weekends I try to increase whatever return that I already have. Now, what do I put the money into? I pay attention to where the prices of other assets are. So on Friday I would sell out all my returns, and I'll go look at crypto. Now this is where crypto comes into play here. Now I only stick to right now the assets that are on Robinhood because it's a lot easier, because you can sell on Robinhood, and then if the price of crypto is down, you can easily just buy Bitcoin. So on Friday, if the price of, if the crypto is down, I look at the crypto charts and I see if crypto is at a low point, and I would just make my judgment call. So basically, what you want to do is you want to buy crypto on the bottom and get some of those small 1%, 2%, 3%, 5% gains, and you make your return grow for the weekend. And well, once you grow that for, you maybe double it or whatever, you sell that, and then you put it back into your S&P 500 or your stock. This means this way you're constantly growing. The only other way for you to do this is you sell your S&P 500, and this is probably the easier thing to do, but you sell your S&P 500, your interest, and then you look at the price. You look at the price of that stock. So let's say you made $50. Say you made $50 in gains for a week. You look at the price and you look for good points of drops in that same stock. So if you pulled out, now what you want to focus on is when you sold, what was the price that you sold at? What was the price? Because you want to use that as a reference, because you want to wait for the price to drop a little bit. Once the price drops a little bit, you can then take it and put it back in and compound it. You compound it. And basically what it should do is it should buy you more shares. And as you get more shares, you'll be able to make more money and you'll be able to compound, and the snowball will keep going. So those are just two methods that I'm doing. The top priority here is you have to have consistent money coming in where you're pumping it into one of these ETFs. So once you get that snowball rolling, you can then try and focus on increasing your return that you made for the day, for the week. Anyway, that's kind of my strategy going. I'm actually going to see if this works, or see if it is a good strategy. The first thing that I'm going to test is selling the stock and coming back in when the price drops a little. That's the first thing I'm going to test, and I'm going to test to see if my sales increase by doing it. And if that doesn't work, if I don't see an increase in my shares doing it that way, the next thing I'm going to do is sell and follow crypto and see if I can get some gains out of that. So that's what I'm kind of doing to compound my money. The goal here really is to get some money, put it into this, and have it compound to where it's making you $100. You're seeing $100, $50, all those big amounts. So you pump enough in here to have the compounding effect roll in, and you're consistently making gains doing it this way. Anyway, I'm going to test this out, but I think these are two good strategies. But the main thing that I want to kind of teach today is you got to switch yourself into the mind of, even whatever crypto is doing right now, or somebody's like, buy this coin, buy, Bitcoin, or Bitcoin drops, or you got to make this your top priority so the compounding will kick in, because you're losing more and more time the more you're not doing this. It's kind of a lesson I had to learn the hard way. So anyway, I thought I'd teach this today. And if you get, this is not financial advice. I'm just speaking my own opinion on things. So none of this is financial advice, but if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.